Good morning and welcome to Killik & Co.'s podcast for the 28th of April. Last week saw markets generally move in a sideways fashion, although there was a small sell-off towards the end of the week. Russia and the situation with Ukraine still has the ability to hold the market's grip. With US sanctions tightening towards the close of play last week, it still has the impact of seeing stocks drift a little bit lower and gold move higher. That aside, the market is full of activity. We're seeing quite a lot of M&A activity, and we're right in the heart of the corporate report season. And so last week saw a number of companies reporting, predominantly in the technology sector in the US. Companies such as Facebook and Apple both performing quite strongly. Apple shares trading around 8% higher post their close, with stronger sales of iPhones than expected in what is typically a weaker quarter. If we just take a look towards the week ahead, and starting off with today, we've had a couple of quite relevant first morning topics. The first is that Pfizer has confirmed market speculation that's been brewing over the course of the last couple of weeks that they may renew their activity against AstraZeneca, and proposing possibly an all-out bid for the business. They first approached the company in early January with a 30% premium to the then prevailing share price. That equates to somewhere around £47 a share. They've reinvigorated this conversation in the last couple of weeks, again suggesting a substantial premium, which many market commentators have taken to thinking that they may even raise that to £49.50 a share for AstraZeneca. AstraZeneca have responded with a suggestion that significantly undervalues the group, and therefore they don't propose engaging with Pfizer during the period up until May the 26th, when Pfizer has to make that all-important either put up or shut up decision on the potential takeover. We've also seen the chief executive of BG Group resign this morning for personal reasons. It takes place with immediate effect, but leaves the company vulnerable at this stage. It is in the process of looking out for a new CEO, but they have also warned that because the situation in Egypt, where they do produce quite a lot of gas, has still remained difficult. And indeed, they're seeing a lot of the gas being used for local domestic purposes, which they tend to receive slightly less of the quota. The net result is that their production will be towards the low end of expectations. Initially, we saw the shares off around 5%, but they have rallied, thinking that this may be an opportunity for somebody to come and bid for the business. Turning to the week ahead, really a couple of things to focus on. In the US, we have the advanced reading of the US GDP. An important number. This is the first reading of that important statistic. 1.2% is the expectation. We also have a similar number coming out from the UK. Forecasts have been raised from 0.7 to 0.9%, with the feeling that the construction market bounced after a disappointing last quarter, and retail sales have remained quite strong. So both numbers out this week. Later in the week, we also have the non-farm payroll numbers in the US, which are often very closely watched. In Europe, we will be hearing more about inflation. And this has been a key number in the thoughts behind the ECB having to engage in more activity of a QE nature. That inflation number is due out on earlier part of this week. In terms of corporate results, we've highlighted in black here some of the key ones for us. Oils, Big Oil reports Q1 numbers, so BP and Shell are out this week. GlaxoSmithKline, obviously with that big deal last week, also reporting, and we have some of the tobacco stocks later in the week. And as mentioned, BG Group, with that news this morning, are due to report out on Thursday. We shall also hear from the banks, Lloyds and RBS on their Q1 data, and Intercontinental Hotels, which was one of our sort of preferred shares for 2014. Turning to some of the charts, a quick run through just some of the currencies. Sterling continues to push ahead. It is having a negative impact in some aspects of financial markets. Over the weekend, the Sunday Times alluding to the fact that it's costing around £3.5 billion to dividends being paid out. This is typically by the big oil companies who tend to price their dividends in dollars. This means that obviously the sterling value of that has been reducing over time, and that is having a sterling impact on the value of dividends. It is also impacting on corporate profits. Indeed, WPP, just another company added to the list of businesses that are warning of the headwinds of higher sterling. In translation, last week they suggested that it could impact by around 8% on their translated profits back into sterling. That was the only sort of negative in what was generally seen as a positive statement from WPP last week. The euro's been pushing higher, so really both of these against the expense of the dollar, so an important feature. In terms of financial markets, the S&P, as we can see, the S&P has really sort of holding in there towards the sort of near highs. So despite the fact that we have seen a little bit more choppiness and volatility, particularly in technology stocks and NASDAQ, the S&P is holding quite firmly. Ahead of those US GDP numbers, I think just worth visiting the 10-year yield chart in the US. Really has settled into a sort of plateau around the 2.66%. That may become more of a feature there. BG Group, this is the chart, as I say, of this morning, on the back of this morning's news. And finally, just to finish on the AstraZeneca, shares trading in the 46 to 47 pound range, and really all eyes on the next 3 weeks as to whether Pfizer can convince enough people that their bid is worthy of consideration.